there's a few things I know about the pound yen right off the bat, and I could use the AutoChartist Power Stats, which gives me an idea of not only the typical daily range of a pair like the pound yen, but it will let me know hour by hour. For example, between the 11 to 12 o'clock hour, what's the typical volatility like? Okay, these are things I can get from Power Stats, so I know what the characteristics of this pair is at this time, at specifically this time of the day. So, a couple things to note. This alert that I've brought up here of the pound yen 60 minute is what? It's a continuation pennant. Now, not that I'm disagreeing with AutoChartist, and certainly what defines a pennant could be different from trader to trader. I mean, pennant to me usually is more along the lines of a triangle, and even more specifically, more along the lines of a symmetrical triangle. So when I take a look at a chart that looks like this, immediately I'm thinking to myself, this looks a little bit more like a falling wedge. Two downtrends. They're not parallel, so I won't call them a channel. So to me, it's a little bit more like a falling wedge. Okay, but since there is a pennant here, in terms of the definition, I'm not going to get hung up on this. Okay, in terms of what the actual name of the pattern is, I'm much more interested in, this is a continuation pennant here. I'm much more interested in what the lines and levels are doing. And like I said, I think it's really easy to see that this is a downtrend line here and another downtrend line here. Okay, now when I go back to the 60-minute chart of the pound yen, I know that if the market cycle is heading down, then I can use this as and consider this to be a more of that falling wedge here that I'm annotating. Okay, if the market cycle is more sideways, and that's a big if, but if it's more sideways, then I can use this top line here as a downtrend line within the context of a consolidation or a congesting market. So those are the choices that I've got. So even though I may not necessarily agree with what AutoChartist called this, AutoChartist could call this a peanut butter and jelly sandwich. I could call this, whatever I want. The name, the title means less to me than the underlying market cycle and what AutoChartist is trying to tell me. Now, you and I could go draw our own trend lines, couldn't we? That wouldn't be difficult. We could absolutely go do that. And if we find ourselves in a situation where we've got lines and levels like this, think about this, and this is really at the heart of all trading. If we were to pass around this chart to a number of people, I think we'd all agree these are pretty good lines and levels within the context of going back to, let's see, this is going back, how big is this pattern? 30 candles. So this is going back 30 hours. Okay? The length of this pattern is 30 hours. Okay? So just barely over a day. So it's a relatively short-term pattern within the context of a 60-minute chart, because the market memory of a 60-minute chart can go all the way back to 2 weeks. So it's a pretty young pattern, if you will. So with this young pattern, and these lines and levels are pretty good, I think we'd all probably agree in terms of near-term downtrend line resistance and support. We'd probably all agree on these more or less. I have some nuances, but we'd probably agree. My point here is, what we decide to do at these lines and levels is dictated by the underlying market cycle. If I want to play a breakout breakdown, if I want to play a reversal of what AutoChartist calls a continuation pattern, my reversal and my breakout breakdown will be both focusing on this green resistance line. And right now, because AutoChartist has called this what's called a complete pattern, in other words, notice how prices have broken up through the resistance of this downtrend line. AutoChartist now says, okay, the breakout's complete, it's to the upside, and here's the prediction region right there. So if I was looking at this market within the context of a sideways congestion consolidation cycle, this would simply be a downtrend line break. But if this market was moving lower, as a falling wedge would insinuate, kind of the way these two lines are forming, this would be a reversal of the previous trend that created that falling wedge. But my decision level and my action would still be the same. It'd be a breakout, breakdown, or in this case a breakout through the resistance of that downtrend line. So that's the 60-minute dollar yen, and the way we can use these individual lines and levels, and how we can benefit from what chart pattern trading is and what AutoChartist is trying to communicate to us.